Classification of assessment. First, we should know what is assessment. Assessment is checking and finalizing how much tax you should pay. Assessment is of three types, namely best judgment, baseless, and self assessment. First, we can see what is best judgment assessment. When the taxpayer fails to file a return or does not cooperate, the assessing officer makes the assessment based on the best available information. It is done on the officer's own judgment. That's why it is called as best judgment assessment. It is applicable when the assessee fails to file the return and fails to comply with notices given by the assessing officer or ignores it and fails to produce accounts or evidence whenever the assessing officer is asked to do. In short, when the assessee does not cooperate, AO uses his best judgment. The next is faceless assessment. In this, the taxpayer has to calculate his own income and tax and file ITR. Objectives of faceless assessment is eliminate personal interference between assessee and officers, ensure transparency, reduce corruption and harassment, improve efficiency through digital working. The procedure for faceless assessment. Step 1. Selection of case. The National Faceless Assessment Center selects cases for assessment electronically. Step 2. Issue of notices. The NFAC issues a notice under Section 143(2) to the assessee. The assessee has to respond online through the income tax e-filing portal. Step 3. Assignment to assessment unit. NFAC randomly assigns the case to a regional assessment unit. No officers know who the taxpayer is. Step 4. Verification or technical unit support. If needed, AU may ask verification unit and technical unit. Step 5. Draft order submission. The assessment unit prepares a draft order based on evidence and submission. The draft is sent to a review unit for checking correctness and fairness. Step 6. Final assessment order. After review, the NFAC finalizes the order and sends it to a assessee online. Any demand notice, penalty, or refund is also sent electronically. Step 7. No physical contract. Throughout this process, no meeting with officers, no paper documents, all communication through online portal or email. After following all these steps, the assessment process is completed through National Faceless Assessment Center NFAC. The next is self-assessment. In this type, the taxpayer calculates his or her own income and tax liability. The return of tax is filed after paying the due tax. It is the first stage of assessment and is done voluntarily by the taxpayer. Procedure for self-assessment. The step 1 is compute total income. Add all sources of income like income from house property, income from salary, income from business or profession, income from capital gains and other sources. The step 2 is compute tax liability. Calculate tax as per the stab rate like old regime or new regime. Add surcharge if applicable and health and education says 4%. Step 3. Adjust prepaid expenses. Detect the TDS and TCS and advance tax already paid. Step 4. Calculate balance tax payable. If any tax is still due after adjusting TDS and advance tax, pay it as self-assessment tax. Step 5. Pay the tax. The balance amount is paid using Challan number ITNS 280 online through the income tax portal or banks. Step 6. File the return. After paying the self-assessment tax, mention the BSR code, date of payment and Challan number in the return form. Then file your income tax return. Thank you.